Hello everyone and welcome to my channel Options Trader Today. So today in this video I will tell you how the price of gold has moved in the last 2 days. How the price of gold has moved in the last 2 days and how the price of gold can move in the next 2 days. See, if you look at the chart of gold, what you can see that the gold price has currently trading at around 1899.09, and it's been a good fluctuation we can see in commodity prices. Okay, but mostly it is in a range. Before that we move on. If you have any doubt regarding gold or any other commodities, you can mail me at stockmarkettradinglive@gmail.com, and one mail ID I have given in the description. Please watch the full video, then you will understand how this technical in gold is working and other commodities. And if you wish to join my Telegram channel, I have given in the description, you can join. See, now look at the chart. This is a U pattern forming, the same pattern U forming here. Okay, first, second, if you look at those particular two frames, both are same. Okay, now, and if you look at this particular pattern, a cup pattern is forming, and if you look at this particular pattern, it is a U pattern forming. But suppose if the price goes above a level of 1972, we can see a cup pattern will form in this particular zone also. Okay, so first one is this, second one is this. So it can move the same probability of moving like it has moved if it moves above a level of 1972. Okay, so before that, see, now understand one thing. Okay, suppose if the price of this particular gold sustain, then we can see it can touch a level of 1916. Okay, and this 1916 already being a weakened support, weakened resistance, so probability will be high. We can see it can move further upside towards a level of 1932. Again, keep this in mind. If the price sustain this particular level, we can see it can touch a level of 1912. Okay, and this particular level sustain, then we can see a level of 1932, because this has got a weakened resistance and already being tested twice, so probability will be high. We can see a level of 1932. And suppose if the price sustain above 1932, then we can see it can touch a level of 1960. Okay, and once 1960 is crossed upside, then we can see it can touch a level of 1968, and from there we can see it can move further upside towards a level of 1976. Okay, and 1976 if level sustain, then we can see it can move further upside towards a level of 1988, and from there we can see it can touch a level of 1996. This 1996 already being tested twice, so probability will be high. We can see it can move further upside towards a level of 2072, and it can make further upside high. But suppose if the price didn't sustain this particular level, what we can see? Suppose if the price didn't sustain this particular level, we can see it can touch a level of 1876. And if it goes below this level, before 1876, if it didn't sustain this level, then we can see it can touch a level of 1888. Okay, and if the price didn't sustain this level, then we can see a level of 1876. And from there we can see it can fall further, because 1876 is already being tested here, so probability will be high. We can see a level of 1872. Okay, and if this particular level didn't sustain, then we can see a next support coming at around 1852. Okay, so the price, if it comes below 1852, cross once and goes below this particular level, we can see it can move further downside to a level of 1832. And once 1832 is crossed downside, we can see it can move further low towards a level of 1812, and then we can see it can move further low, and then what we can see, it can be in this particular range, and when we can solve, we can see further low. Okay, now understand one thing. If you are trading is risky, and you have to follow a certain process, then only you can be a successful trader. Okay, and one of the things that I teach in my workshop, that suppose if you are trading with $10,000, try to trade with 10 to 15% of your capital per trade. And suppose if you trade 5 times, and risk should be 0.5 to 1%, that is around $50 to $100. Okay, suppose if you lose 5 trades, you know your risk is $500, you can be relaxed for the day, and then you can trade the next day. Then you will not be focusing on recovering the losses rather than focusing more on profit. That is very important. Okay, this is what I teach in my workshop. If you want to attend the workshop, you can mail me regarding this. So hope you like the video, and if you like the video, please go thumbs up, and if you are new to my channel, please subscribe it. Thank you.